What the market was thinking was rate cuts mean that all other assets go up, equities in particular, housing too, because they expected they would be happening in a vacuum, that somehow rates would be coming down, but there wouldn't be any rate reductions alongside any economic bad news. In other words, there wouldn't be a recession, there wouldn't be anything painful or unpleasant. It's just that rates would come down. Well, we don't know exactly what's going to happen in Australian or the global economy, but a lot of that confidence that rates can come down without there being bad news along with it has now evaporated.
The RBA Governor Michelle Bullock touched on that today, indicating that it was either high interest rates or entrenched inflation could lead to recession.
Well, that could well be the trade-off. I mean, certainly you have an unpleasant matrix of possible outcomes going forward where you could have high inflation, you could have high interest rates, you could have high interest rates and high inflation, you could have lower interest rates and a recession alongside lower inflation. And of all the possible outcomes, it's it's an optimistic outcome to presume that you're going to have lower interest rates and lower inflation and low unemployment and no recession, which is what everyone's been promised by central banks, but which is very rarely delivered.
Now, the volatility index or the fear index is at around a 1 month high. Why are investors so jumpy?
Well, we've had a couple of weak numbers out of the US in the past couple of days, and we've got another key US number coming out on Friday. Again, right now, when you look at the US data, there's also uncertainty there. We're not quite sure how accurately they're capturing what's actually happening in America, given that we've had two changes demographically and in the labor market there. But the concern is building that they are showing enough that we are heading to a more worrying scenario than we were looking for, a couple of months ago.
What do you make of the US economic outlook? It seems more murky. In your note recently, you mentioned the word stagflation.
Well, stagflation is a strong word, and I mentioned it because there are pockets of that in the US. Very similar to what you see in Australia, there are, certainly demographics who are hurting badly where things are now. There are people who are really feeling the pinch, and there are certainly deflationary pressures in certain pockets because of that. But at the same time, some people are actually very comfortable. Some people are doing very well. And there are lingering inflationary pockets in the economy as well. And how we use interest rate policy to address those sharp dichotomies going forward will tell us which one of the two is going to win out. And we have a house view that will have a short, very mild downturn in the US. But we also have a house view that inflation is going to come back next year if Trump wins the election in November. And of course, people can have a different view on that, which will imply a different inflation and a different economic outcome. But again, that brings us back to my key point. We just don't know. And if markets want certainty, they're not going to get it.
Well, it is nearly time for the September rate cut, 2 weeks away, the first cut since COVID. But it's 50-50 now, according to markets, whereas about 2 weeks ago, it was almost a certainty.
Well, it's 50-50 in the market's view whether we get 25 or 50 basis points. That's the new conversation. The fact that it's September is almost certain. Were we to get a 50 basis point move, which we do not expect, on one hand, you would say the markets might be thrilled because that means they get even more liquidity, equities might go up even more, house prices can go up even more, all these wonderful things. And I'm being slightly sarcastic in saying that, by the way. But on the other hand, the Fed very rarely start a rate cutting cycle with a 50 basis point move unless they think something very, very severely wrong is happening in their economy. The last time I can remember was in 2000, for example, where they suddenly jumped in with a 50 basis point cut because the tech bubble was bursting.
Well, in Australia, Michelle Bullock again rolled out the message that there will be no interest rate cuts in the near term, but here markets don't quite believe her still.
Well, yes, the Australian market is only independent of global markets to a certain extent. And if everywhere else, everyone is just saying cuts, 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 then of course they're going to expect the RBA to follow along. I mean, let's be blunt, the RBA do that. Australia is part of the global economy. It follows the global cycle. I think the key question is how long they can keep them on hold. And I think a relevant point here also is that historically, or at least in recent history, Australia's looked more to the Chinese economy in terms of its economic cycle. But we are seeing further and further indications that it's reverted back to the pre-China pattern, or actually it's what's happening in America that's going to be driving things.
Michael Every, thank you.
Thank you.